Oil prices have fallen significantly over the past year. I asked Jeremy Weir, the chief executive of Trafigura, what opportunities that was presenting for trading houses.
Look, as a trading company, flat price is not what motivates us or what drives the profitability of our organisation. We trade arbitrage, so it's structure of market, etc. So therefore, but typically in a low trading environment or low price environment, you do have a structure of a market which creates opportunities. And really earlier this year, after the price fall, we saw a structure in the market, big containers, which enabled storage plays to be put in place where you could store physical oil and sell for it on the futures market to lock in containers. So from that point of view, they were very attractive environments for the trading entities, and probably since 2008, although more recently we've seen a decline in that environment. It's like tightening of the forward market as the price has lifted and some producer hedging, which has made it slightly less attractive.
Okay. And do you see sort of the dislocation that we've seen in energy markets? Do you think that's going to present interesting sort of asset opportunities for Trafigura, would be they downstream, upstream? I mean, do you see those opportunities coming?
Yeah, look, I think what we try and do, is we look at logistics operations around the globe, which can assist our trading operations and assist our clients and provide services to the industry. So in a current environment, we do focus on downstream. Upstream is not what we do. But on the logistics point of view, we are seeing potential divestments from some of the larger players, and as a result of that, if it's an opportunity which is complementary to our existing trading activities, we definitely will look to invest.
There's a lot of competition for assets at the moment from private equity and things. So, I mean, are prices relatively high?
Look, I think we have seen an inflation in prices over the years, low interest rate environments, and also, just general sort of amount of capital which can be allocated towards a sector. That being said, what we do is we look at each individual asset on its own merit, and we see how it does complement our trading activity. Furthermore, I think we do have a different view from many, is that we combine the trading activities also with the asset itself. So it's, if you like, it's a global package to how we evaluate the underlying asset.
You've been chief executive for a year, and so one of your big initiatives has been to join the big transparency push within the sort of resource sector, EITI. Can you explain a bit more why you decided to sort of go ahead of your peers and do that?
Look, I think there's various challenges that exist within the trading arena, and one of the largest challenges that we have is in the transparency, in the area of transparency. And so we feel as though it's very important for us, our stakeholders, and generally the industry, to be very open and transparent about what the business is about. There's been a lot of sort of mystique historically, and for us, I think it's important that it is clear of how we deal with national oil companies. It's been led by upstream in the oil industry and also the mining sector. So we think it's important that the trading entities and trading partners that we have, adapt this same sort of process. And for us, we're very happy and proud to lead it.
Okay, and leading into transparency, I mean, I guess that helps when you're sort of talking to regulators, because the industry is facing, particularly here in Europe, a sort of swathe of regulation coming in that could impose all sorts of capital positions, position limits on the industry. I mean, how worried are you by it?
From a regulatory point of view, we are regulated. We deal in futures markets on a day-to-day basis. I think the issue really is are trading companies like banks, and are we too big to fail? We've been open about that. We've issued some white papers on that particular topic. And for us, the critical issue is, do you require capital for the business, and is it relevant to have that capital? And from our point of view, it's not. We're very transparent what we do. It's not going to add any value. It's probably dead capital as a result of that. So while regulation is something we're very much aware of and focusing on, we have a very strong opinion, and again, leading the debate.
Okay, and just perhaps a couple of sort of market questions to round up on. Having in this very hotel a couple of weeks ago, the sanctions agreement with Iran. Do you think Iran will present any opportunities for Trafigura going forward, assuming that the sanctions are, of course, lifted?
Look, I think that's the key point. When the sanctions get lifted, when people are able to freely trade in oil with Iran, it's something we'll be looking at. Yes.
And if we just turn then back to where we started, the sort of oil market, do you think we've seen the bottom for the oil price? Look,
I think we're starting to see. If we go back, we saw a surplus in oil, probably in relation to extra production coming out of Libya. Now we're starting to see some form of curtailment in the US on a future-looking basis. OPEC obviously hasn't taken the foot off the accelerator, so therefore we have got an excess of surplus. However, in the light ends, in the refined products, we are seeing additional demand in a low price environment. I personally sort of think we'll start to see the market come back more into balance, and on a forward-looking basis, we should see the prices, slightly elevated. But we're looking for a sort of a major recovery in oil prices, not at this stage.
Okay, Jeremy, thank you very much.
You're welcome.